So now that we've discussed savings in depth, I think we went into it. I think now let's talk about investing. So just because I'm talking about investing, it doesn't mean that I'm an advocate for investing and Kenneth is an advocate for savings. In fact, I believe that you should have both. You should have a savings account and you should have an investment account because the objectives are different. Investment, long term, savings, short term.
They call it having a diversified portfolio where you know that this money it can always be used for short-term, long-term needs, and this one you can always use it as a portfolio that you are looking at building your wealth, using that portfolio. So investing, when you talk about building wealth, building fortune, you might want to start looking at investing.
Sure. So, like I said, first let's start with with what is investing. I've explained that investing is mainly long term, but what does it mean when someone says that I'm an investor? What does it really mean when someone says to you, you know what, I'm an investor? So investing, it's mainly buying an asset. So the assets can vary from stock, the assets can vary from bonds, from mutual funds or real estate, with the expectation that your investment will make money for you. So the intention behind investing is mainly to grow the amount of capital that you put in. So you want the focus is really the returns that the amount that you are investing will generate after a certain period of time. So investing are usually selected for long term goals. Like I said, they are very long term. But sometimes, given the uncertainty in the market, sometimes the returns can be very much short term. It mainly depends on what is happening. So for like I said, if you want long term benefits or long term returns, then definitely it is important for you to start thinking about investing.
I mean, like if you have to look at the issue of investing, I'm gonna bring it a bit back home before we go into it. Uh, if Matabelo allows me to do that, she just allowed me. Okay, let's look at the topic of uh, one of the major companies that we have in South Africa. We have Sasol, for example, which is a very good topic that if you want to buy shares, you need to know companies very well. You need to be a person who reads business news. You need to keep up to date with what is happening around business so that when you buy, you know exactly what you're putting yourself into. So I want us to just do an example of buying shares in the companies like Sasol. So I'm going to allow Matapolo maybe to just brief us on that, on what is currently happening with Sasol and why is Sasol at the moment a good example for us, or a good business that people can start buying shares into. Many companies, when you buy shares, you want to buy shares when they are at their lowest, because of you don't want to buy shares that they are already at a certain peak. They are already doing good. Chances are you're not going to get a lot of returns on that. But for example, like I'm saying, let's look at the shares of Sasol. Matabelo will just take you through that.
Okay, so what has been happening with Sasol is that, so given everything that has been happening, the lockdown, Sasol, even though it produces a lot of things, so it is also a company which supplies petrol, right? And with petrol is in it's mostly a demand and supply commodity. So if what has been happening right now is that with the lockdown, a lot of people are at home. People are no longer traveling to their workplaces. People are no longer traveling really, even though people are traveling, but the number of people that are traveling now, it's very minimal compared to your normal day-to-day travels that were happening under normal circumstances. So what has been happening, there is no demand for petrol, right? And if there is no demand for petrol, it does not make sense for the price to remain high. So because of the lack of demand, Sasol has been one of those companies or commodities that has been very volatile. So it has been fluctuating at a very, 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 very high rate. So if you can look at, so what the app that we normally use for our investment is Easy Equities. So if you can look at Easy Equities, Sasol, a year ago per share, to buy one share in Sasol, it was 500 rands, right? Just one share in
That's a
Sasol,
lot.
it was 500 rands. And then if you look at what has been happening, I think when did you buy your shares?
I bought my shares around the 23rd of March, and when at the time I was buying my shares, I bought them. Each share was trading for 27 rand.
You see, guys, so from 500 rands to 27 rand. So that is what we mean, that even though it can multiply, the inverse is true. Imagine someone who bought the shares at 500 rands, and then a year, no, it's been few months, because a year was like, so this was, the 500 was in April 2019. So in April 2019, per share, it was 500. And then let's bring it a little bit closer. In October, per share, it was around 280. And then 3 months ago, per share in Sasol, it was around 280, still 280, 250. But what is happening now, when Kenneth bought his shares, it was like 27 rand. So imagine someone who bought shares when it was 500, when it's 27, they would have lost to the core.
Yeah,
Like, you can
yeah.
just, you would have lost to the core. But now what is happening, when Kenneth bought the share, it was 27 rand. But today, as of today, which is the 24th of April, per share, it's now trading at 67 rand. So it means Kenneth doubled, in fact
Yeah,
tripled.
I've actually made about 160 to 150%
Returns, right?
returns
And that
on
is
the
in
share.
percentage terms. So that is not 150 rand. It depends on how much he put in. So that is what we mean by that. Investing, it's a way to go, but it is very volatile. In as much as you can double for Canada, I mean, it's good news.
Mhm.
But for someone who bought the shares at 280, or who bought the shares at 500, you can only imagine what they are feeling right now. In fact, most of them have sold their shares. Most
Yeah,
of them
true,
sell,
true.
sell, because it doesn't make sense for you to hold on to something that you can see that the value that you would have invested is just depreciating and depreciating and depreciating. So by the way, Sasol is just one of them, right? So and that Kenneth, I think, spoke about diversifying your portfolio. So also with investing, if you know that you have maybe 1,000 rand that you're not gonna need a year or two or three from now, and you want to invest it, it is very important that you diversify, right? So when you diversify, you are mainly spreading your risk. Let's say today, if you are like Kenneth, who bought the Sasol shares at 27 rand, and then the Sasol shares continue to depreciate. But if you diversified, and maybe you bought shares in another company, maybe let's say you bought MTN, for instance, and let's say MTN is doing well, so it means on one hand you are losing, but on the other hand you are profiting. But also with investing, the key thing is long term, right? Long term, because sometimes we make panic buying and panic selling. If you see that something is losing its value because of whatever is happening at that moment, then you panic sell, and then tomorrow when you wake up, it's picked up again. So it's very important that you make an informed decision, honestly.
Yeah, you are touching on a very important case, Matapelo. When you with shares, people need to understand that you might need to be, you know, a bit patient with the market sometimes, and it also depends on your risk appetite. I'm one person who like to take risk, but obviously my risks are calculated. I don't just take any risk. I calculate my moves before I make them. But those risks, when I look at the risk that I take, I have a long-term vision. I'm not a person who will buy shares today, tomorrow they drop, then I will sell them. I always know, if you look at the economic graph will always show you that it will always go up. Even if it goes down, it will always go up. So if you know that the economic graph is that the the economy will always be picking up. So we might be at the worst stage as we speak, but we'll definitely have times where economy is just flourishing. So if you have that mindset to say that even if we are down, if I buy now 2 years, 3 years, this coronavirus won't be here. The market will be perfect. There will be a demand. The share price even for Sasol might even go back to 500, or it might even pass 500. And I just bought it for 27 rand. You can imagine what's going to happen to it. So when even with other companies, I'm just making use of Sasol because I'm more informed about Sasol, and I own one of the shares in Sasol. So I'm a
You are a
shareholder.
shareholder.
I'm a shareholder, a chairperson.
Put some respect.
Exactly, I'm a shareholder, must go to AGM meeting. So
Wow.
what I'm saying is that it becomes very interesting if you know that if you invest now because the economy is not doing well, And if you know what influences the market as well, why the price is dropping, why the price is going
Yeah.
up, then you are in a better state to make the financial
Decision.
decisions.
Yeah.
That's why I'm saying that shares, there's a whole lot of things that you need to know about shares. You need to learn the market on its own. You need to know what influences the market, what type of news have impact on the market.
Yeah. Yeah, I think you also touched on a very important thing, that it all depends on your risk appetite. And I think we also need to understand that our risk appetites are not the same, and they are influenced by a lot of things, right? You can't say you have a risk appetite of 5,000 if you are earning 8,000. So your risk appetite will inform the type of financial decisions that you make. And don't put pressure on yourself just because everyone is buying shares in Sasol, and at this point you don't understand why Sasol, and why not maybe PPC, why not Curo. It's fine. Take the time to educate yourself so that whatever decision that you make, whatever the outcome of that decision, you are able to stand firm and say, you know what, even though I have lost, should you lose, I made a decision that I know at that point was best for me, and not because Matapelo or Kenneth said 1 2 3 4. Because the danger with making decisions based on hearsay is that when things take the opposite, or when things take the unfavorable turn, you want to blame people now, and you end up becoming bitter now, because sometimes you can blame me, but you find that I was observing the graph, and then I saw that okay, it's losing its value, and then I withdrew the amount that I have invested, and with aims that I will buy in future. And then on the other hand, I'm busy celebrating the fact that I made profits at that point, but you didn't, because you are waiting on Matapelo to tell you what the next step is. You are waiting on Matapelo to tell you what you should do next. So it's very important that you take the time to educate yourself, really.
It goes back to what we said, the importance of financial literacy. Guys, you know, financial literacy, it starts with very small things. Managing your money at home, managing that 100 rand that you have, being disciplined with it, knowing that I need to buy the necessities, differentiating between what you want and what you need. So you need to start there. You need to start with what you have. You don't need to wait for the day you are earning 50,000. Start now with what you
You need
have.
to start.
And the aim is to start. You
Yeah.
know, I always look at that advertisement with Benny McCarthy where he says, you know, you want to know the secret about success.
Start.
You must just start.
Yeah.
So even with you, whether you are earning 3,000, 1,000, 1.5, 5,000, you are doing internship, you are on a contract, what is important is for you to start.
And start with as little as you can.
Exactly, you
Stop
know.
saying that I'm waiting to get a job that will pay me 20,000 or 15,000 before I can start making informed financial decisions. Start with what you have. In fact, a lot of people started with what they have already, and it's
Exactly.
fine to lose. Just as it's good to make profits and benefit, but it's also fine, man, to lose. It's life after all. While at some point you will lose, at some point you will win.
Exactly. You know, I always say that behind every successful person, there's more than 100 failures that that person went through, which me and you might not know.
Yeah.
So, people that we celebrate today that are making it in life, we don't know what it took for them to get there. But I can tell you, it took more than once or more than twice as much as they wanted to win. So, it might have taken them 10 times to just get it right. Remember, you need to get it right only once to make it. But before you get it right once, you're going to have so many failures in your life. So you must just, you know, accept it, embrace it. In fact, I tell people that failing is part of winning. You know, it's a winning strategy because it's another level of your emotions. You need to be able to know that when you are at a place where you feel down because of you have failed, you have not failed. It's just a stage for you to even try harder next time. So those are the key points that you need. Those morals go hand in hand with what you need to know in terms of financial literacy. So I would suggest that you must grab every book, grab everything that is next to you, every material, every free content on financial literacy.
And
You will
ask.
see how far you're going to go with this, you know.
And yeah, and I think asking also,
Exactly.
don't be shy to ask. I think we live in a time whereby people have it all figured out together. People know it all. You know, you engage in debates whereby it's not really about the value that you bring to the conversation, but people just want to test what you know and how far you know it. So sometimes it makes people who don't know to shy away from asking. And asking, really, if they judge you, at the end of the day you would have learned. Ask. I was reading a post on Twitter, and the lady was saying that sometimes you win, but sometimes you learn. And that's what happens with failure. When you fail, there's a lesson behind it. Take the
True,
lesson
true.
and move on. So yeah, without any further ado, we've been on this investing topic. We were at some point motivational speakers. But yeah, so
Yebo.
let's talk about the advantages and disadvantages. For everything, there's an advantage and there's a disadvantage. So the first advantage is that savings accounts provide the potential for greater returns. Investment, so the first advantage is that, say, investment accounts provide the potential for greater returns compared to savings account over a longer period of time. So the longer period of time, it's the key word, right? So with investing, like we said, the potential for you to double or to triple or to make times or to make 10 times the amount of money that you invested are very much high, just as the possibility of you losing the amount of money that you've invested are high. But as compared to with a savings account, you need to wait decades for you to double the amount of money that you have.
I think again with that, Matabelo, when we talk about the risk, that's why I said we take calculated risk when we invest. I mean, when we invest, we do our research, we do our analysis, we analyze the charts, we analyze the graph, we watch news, and mostly we buy stock that we have, a pretty much knowledge about. We actually buy stocks like your MTN, your Vodacom, your Sasol. These are brands that will be there for years and years to come. These are trusted brands. So by buying brands that you know and you love most, it makes it easier for you to know the risk, because we consume these brands every single day. So it becomes easier for us to just associate ourselves with them, even to even learn about the risk of these brands, because they are just in our face every single day. So start with the brands that you know, that you trust. They have been there forever, these brands. Your Shoprites, your Pick and Pays, they have been there. So start with what you are exposed to
Okay.
limit the risk.
True. And then, yeah, the second one is that investments, I think I spoke about this, that investments allows you to diversify your portfolio. And I explained what I mean by diversifying. So diversifying simply means buying shares in different companies so that you can spread the risk. There is a probability that both companies or all five companies that you have invested in, all of them could be making losses at that time. But there is also a probability that others could be making profits, others could be making losses. And then,
I think the other key issue with what Matapolo just raised is that when you think about diversifying your portfolio, like with me, when I started with my portfolio, I bought shares in different sectors. You have your financial sector, you have your health sector, you have your education sector, you have your retail sector. So that's what I mean when you say, let's buy brands, but let's also buy in different sectors,
yeah,
because let's speak now. Other sectors, like your car industry or your manufacturing sector, might not be making a
doing
lot of
well.
money because of the COVID-19, but I can tell you the health sector surely is doing well. So it is those advantages where we say that when you are losing because of the other sector is not doing well, you can actually balance your portfolio by having another sector that is doing well. So you normally don't even have a lot of losses, because some of your portfolios are making more money than what you are
Yeah.
losing.
And I think, yeah, I think you spoke on a very important issue about diversifying. So which I didn't clarify. I just said diversifying is mainly just spreading your investment. But when you spread your investment, it's the how you spread it.
True.
Yeah, and the how part, that's where you spoke about it, looking at different sectors.
Mm.
If you want to minimize the risk of losing all of your money at the same time, then you look at different sectors. Yeah, so Kenny, you spoke on a very important point there about diversifying. I know that I explained diversifying, but I really didn't touch on it. So diversifying, we mean that diversifying in different sectors. So your different sectors can be manufacturing, can be the energy sector. So it mainly companies that operate in different sectors. But there are other people who prefer to diversify in the same sector but across different companies based on the research that they have done and the information that they have. So it mainly so there's no one who's right, there's no one who's wrong. It mainly just depends on how informed are you about the decision that you want to make, really.
Yeah, and again, like I like what you said there. I will just give an example of what I from one of my portfolios. Like I have a sector, the communication sector, where I'm investing in MTN and Vodacom. And if you can look now, in my Vodacom portfolio, I am on a positive. I am making profits, but with MTN, I am making the loss, and they operate on the same sector. So it is possible that even if with buying shares in the same sector, the other one can do well and the other one cannot do well. So it's just how you want to, classify your portfolio at the end of the day and diversify it. I mean, like for me, the losses that I am making from MTN, I am able to cover them with what I'm making from Vodacom. So that's how diversification of portfolio actually
Assist,
assists
yeah.
you in keeping your portfolio afloat.
Yep. Yeah, and then the other one is that investing is not readily accessible. Well, it really depends on how you want to look at it. It can be readily accessible by just you selling the shares that you have and then just withdrawing the amount of money that you have invested. But because it's so volatile, it mainly discourages people to make consistent or constant withdrawals, because maybe let's say today you invested 10,000 and you can see tomorrow that it's losing. You wouldn't want to withdraw an amount that you can see that it's lost its value. So I think that's mainly what it means, that it's not readily available. Not that you won't be able to take your money out, but because of all these risks attached to it, it's really not wise for you to be tapping in and tapping out of your investment account.
Exactly. Sometimes when you are losing, it's just the point where the market's just about to turn things around and it's just about to go up. So that's why we say that when you are investing, you need to be patient with yourself. You need to understand the market and how it works. Losing today does not mean 3 days from now it won't be making profits for you. So you might need to hold. So what Matapolo was saying, that with investing, you want to hold for as long as you can so that you can get more rewards. But sometimes holding as long as you can, you must also be looking out at the market every single day. I mean, like if you can check Matapel, a lot of people who don't have time to manage their portfolios, they actually hire your financial
Yeah,
advisors, they actually hire your brokers to be the one who are managing those portfolios. But obviously they come at a cost.
yeah,
For me and you, it might not be a feasible thing to do right now. You might want to be managing uh, your own portfolio because it's much more cheaper. You know, platforms like Easy Equity, they make it cheaper for us to actually manage our own portfolio.
yeah.
So yeah, man.
Yeah, so now that we've explained the advantages, let's go into the disadvantages of investing. So, with anything, there are pros and cons, and I think we really wanted to be as open in this video as possible so that whatever decision that you make, you have all the relevant information to be informed. So yeah, let's look at the disadvantages of investing. So the first one, I think we've spoken about it quite lengthy, and then it's that investment accounts are subject to market volatility. Like they are very volatile. You can make so much. The fact that you've made 50% of your returns today doesn't mean that 5 days from now it will be the same. You can make profits today and literally wake up in losses tomorrow. So it's very volatile in that sense. So the value of your investment is affected by economic crisis or market shocks or whatever it is, or economic activities. What happens in the economy with investment really have a bigger impact on your investment.
Yeah, you have a point there, Matabelo. All of this thing, the market shock, your economic crisis, even just the economic news, they can have a big impact on your portfolio at the end of the day. So with me, what I normally do, I like to listen to the president, you know. Every after he announces something, I can tell you there is going to be some movement in the markets because of those announcements. So I always look out for that. I always look out for directions using the speech from also, you know, your finance minister, the president himself, especially now during the COVID-19 crisis where we are under lockdown. Now you know that they are easing off the lockdown. The more they ease off, you know that the economy is going to open, meaning more investors are now going to start buying shares. So those are some of the leads that I use in order for me to get into markets or to open a trade and start to invest.
And to minimize your risk as well. Yeah, and then the second one, the second disadvantage is that there is a potential loss of capital. So, like we said, in as much as you can double the capital that you have invested, or make 10 times more, make 20 times more, like let's say, should things go back to normal, Kenneth bought his shares from Sasol at 27 rand. So let's say if things were to normalize and stabilize and there was a cure or a vaccine for corona, it means maybe the market share of Sasol picks up and then it's trading at 280, he would have made more than 100, more than 500% of.
I would have.
Phew.
I can tell you, I'm still going to make more because I am not at a position to sell those shares yet. I'm looking at a long term, you know, objectivity to say that if I can have these shares in the long term, I'm going to have more than
Yeah,
what I have. They might even go back to 500, like I said. So
or even 200 is still a lot for someone
exactly.
who bought shares for 27 rand.
Exactly,
Yeah,
and you know what I normally do, even with now when they are at 20 at 65 rand or 67 rand, I even buy at that time because
there's
I know the
something.
chances of them even increasing
It's
from
still
there.
its normal
Yeah, you know.
price, yeah. And also, so you have Kenneth who has a likelihood of making more than what he invested, but there's also Peter who bought the shares at 500,
Yeah,
at
true.
500 per share. And given what is happening now, imagine now the share was trading at 27 rand, or what is happening now, it's trading at 67. So imagine Peter who bought at 500. Peter lost his the total amount of capital invested, but he's lost more than that. So
In
you
fact,
see,
Peter lost everything. If
yeah,
if you if you would have bought at 25 at 500 and you didn't take out your money out of it, you would have lost more than
yeah,
100% of it. So you would have lost actually everything
yes,
of your money. So those are the things that we say people must, you know, take cognizance of when they get into investing. It has a lot of risk, but the risk is a good risk if you know what you are doing.
yeah,
It's just a matter of knowing your ins and out in the market.
yeah. So yeah, that's what we mean by there's a potential loss of capital. So there's Peter who is losing, and then there's also Kenneth who's making a lot of money. And also it's a very uncertain. It's full of uncertainty, especially if you are not informed. So if you are not informed and you are just buying because it is fashionable now, I think I found myself at that point. The reason why, in fact, I was introduced to buying shares and whatnot was mainly out of its popularity. Like people were just talking about this thing of buying shares. Oh, this share is dropping, this share is doing 1 2 3, and I was like, yo, I can't be losing on a chance to be wealthy. And then that's where then I asked, well, okay, so where do you guys buy these shares? And then I was introduced to Easy Equities, but before putting money into it, I spent quite a lot of time understanding the trends. Okay, so people are talking about buying Sasol shares. Then I looked at the graph. What was happening in Sasol a year ago? What was happening in Sasol 6 months ago? What is happening 3 months ago? Okay, what is happening now? So it means now that it's at 27 rand and then it was at 500. There's a potential that it might go back to 200 or 300. So maybe it is a good financial investment to make. So those are some of the things that you make. But if you just buy because people are buying shares in Sasol and you just buy, then you are exposing yourself to a lot of risk, because we are individuals. I can buy today and tomorrow decide that I'm going to sell and buy in Mary and Roberts. I can buy today and decide that tomorrow I'm going to sell because of whatever information that I've heard. But if you just buy not knowing what influences a share price to go up, a share price to go down, then you are exposing yourself to a lot of risk, and
True,
you are just
true,
opening yourself up to uncertainty. Yeah.
true.
And I think the last important one to note as a disadvantage is that the past performance of your investment does not guarantee its future performance, which means that you will need to weigh each fund according to the time frame of your investment, your risk profile, and the objectives of your investment. So what we mean that your past performance does not guarantee a future performance, it's exactly what we were talking about with Sasol. I mean, there are a lot of things that are happening in Sasol. They have issues of debt. They have a lot of things. At some point, they were talking about their cutting some of its production. Those are some of the things that you need to know. So because of those things that are happening, it doesn't mean that it will go back to 300 or it will go back to 800. It might go back or it might exceed 800 or 300. So those are some of the things that you need to be cognizant of, that just because a company did well then it will do again, it will do well again in the near future. Yeah.
So, from us guys, I think this topic is very interesting. We could spend a whole day just on this topic talking about it, but we have come at the end of our episode for today. And I just hope that you learned so much from today's topic. And if you really learned something, and if there is anything financially that you would like to know and you would like us to make a video on it, please leave us your comments, and please make sure that you like this video and as well as you subscribe to this channel. I mean, to motivate us and keep us going, you just need to subscribe and we'll keep doing what we do best.
Yeah, yeah. I think it was a very informative conversation that we had between the two of us. We normally have these conversations, but we don't get into the nitty-gritties. So yeah, I enjoyed it. I hope that we will have future discussions, not necessarily on financial literacy, but have these sort of conversations that strikes up conversations even in other communities, whether it's in the comment section, whether it's on WhatsApp, or whatever the case may be. So yeah, thank you for having me, colleague.
She's a colleague. Bye bye.
Bye, guys.